All right. Hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because today we're going to be talking about YMAX, specifically because we want to talk about YMAX and understand YMAX, what happens during a market crash. Because market crashes, I believe personally, are inevitable. I think the market, of course, it will trend up over time, but there will be certain periods of time where people believe that the market's overpriced, or they need money, they need to pull it out the market, and we will see downtrends in the market. This is like we've seen in for example, 2008, 2020, and a little bit in 2022. If we go back, there was even a little bit of a correction. We go back to the 5-year chart here. 2022, we've seen a little bit. But nonetheless, there's opportunities all over the place when market crashes happen or corrections happen. And of course, because the market's not immune, we need to be prepared. We've seen such a fantastic uptrend all the way starting in 2023, all the way up into late 2024, going into 2025. So it begs the question, is a market correction on the way? And if so, how is YMAX, our most prominent dividend holding, our high yield ETF holding, how will it perform and what should we do? So this entire video is going to cover what exactly is going to happen to YMAX during a downtrend, what's going to happen to the distributions, what this means for the ETF, and we're going to talk about some other strategies that you can use in order to help yourself with YMAX and with the market crash. So if that does sound good, we're up to 6,514 subscribers. We crossed over that 6,500 subscriber marker, 391 subscribers in the past 28 days. Thank you to everyone who joined. I really appreciate that you guys are here, and I hope you guys enjoyed this video. For those of you that don't know, we invest in YMAX on this channel. That's pretty much our main holding in our investment portfolio. I currently have my margin account up now. I don't have my cash account, which holds the majority of my YMAX, but I hold about 835 shares. Okay, there's the background. Awesome. YMAX, a 67% dividend yielding ETF with a collection of all the Yieldmax bullish ETFs and some even of the bearish ETFs, which are crash, and the one for NVDY, I think. But what I am certain of is that YMAX holds about 28 different Yieldmax ETFs, and all these ETFs track underlying stocks. Now, YMAX is kind of like a collection of stocks, and I view it very similar to the S&P 500. That's why I believe if the S&P 500 is to fall or have a crash correction, whatever you want to call it, YMAX will likely do the same. But here's the thing, YMAX does not perform like the S&P 500. Although they're similar, they're not the same. YMAX writes synthetic covered calls. All the ETFs that it holds have synthetic covered call strategies. This means that they will take all of the downside but are limited to the upside. So what does this mean? This leads us into our first point. YMAX takes all of the downside. If the S&P 500 was to fall and the underlying stocks within YMAX, as shown here, we have TSLY, OARC, Apple, NVDY, continues on the list. YMAX holds all these Yieldmax ETFs. If they are to fall, YMAX in its share price is going to take all of the downside of those ETFs. They could fall 30%. YMAX is likely to fall roughly about 30%. We might see fast appreciation in all of these underlyings. We might see TSLY go up 20% in one day. YMAX will not be able to take all of that upside. They're capped to about 5 to 15% in terms of the upside based on the synthetic covered calls that were written for that specific time period, whether it be a month or a week. But basically, YMAX won't be able to participate in all of the upside. That's why for all Yieldmax strategies, it's so important that the underlying stock doesn't move too heavy to the downside, too fast to the downside. Let's say drops 10% and then appreciates 10% the next day, because likely that Yieldmax ETF is going to take all of that 10% drop, takes all of the downside, but will be limited on that upside. Maybe take about 5%, half of that upside. Then you're left with an investment. Sure, it still pays a dividend, but it's going to be trailing behind and performing poorly compared to the underlying, which is what we don't want. We want it to trend smoothly, and so far YMAX has been trending very smoothly with the S&P 500. Now, let's say there is a downtrend. Cool. S&P 500 goes down, YMAX also trends down. This in turn could potentially reduce dividends. Now, when looking at the share price of YMAX, it's true that YMAX dividends are basically paid out based on volatility. And although if the share price decreases, we can see here that if we go to April, which is April to May, which is roughly the fourth month of the year to the fifth month of the year, the dividend actually stayed the same and rose. So it went from 56 cents the previous month, then in April to May. Although we've seen a dip in YMAX's share price, the dividend remained the same and actually increased. Why is this? And why do I say that dividends will be reduced? It's because although YMAX is based off of volatility, I believe that in time, if you have our YMAX ETF, pardon me, I'm kind of flipping back and forth here, but I'll stay on the share price. If you have YMAX ETF, let's say it's at $18.46. We have recently seen dividends as high as 30 cents. And I do believe that the higher the share price, the higher the dividends could potentially be. Just like we've seen, for example, in other Yieldmax ETFs where we had like NVDY or MISTI. As their share price rose and rose and rose, we were seeing much greater dividends within those ETFs. And that has something to do with the volatility of the rise in the stock, but as well, when the share price is higher, you have more ability to take out of the share price. And you know what? I do believe that because YMAX's share price has risen, we've seen greater dividends in YMAX, but it's not like a sole contributing factor. I think that if YMAX's share price stays high for a very long time, we're going to see higher dividends. But I do think if the downtrend holds YMAX's share price down, let's say to about $12, let's say it goes down 33%, I do believe that there's going to be a reduction in dividends paid out. So that's something to keep in mind. Now, what happens? We see the downtrend, YMAX is down, maybe they're producing less in terms of dividends every single month. What happens now? We potentially buy an attractive opportunity, which is that Yieldmax ETF. You think back to why did you buy this Yieldmax ETF? When you finish buying the dip, but the market keeps dipping. That's the face you're going to make. YMAX is a well-diversified high yield income ETF. And I say well-diversified. I actually like it because it's more diversified in my opinion than the S&P 500. Now, that's a bold statement. The S&P 500 holds 500 of the largest companies in the stock market, but the S&P 500 is kind of weirdly weighted. Big stocks like Apple, Amazon, Tesla, they make up to close to 30% of the S&P 500. That includes Google as well, and a couple other stocks like Facebook. They make up 30%. Whereas within YMAX, they only maybe make up 15% because each Yieldmax ETF is weighted the same. Whereas in the S&P 500, they're all weighted based on the market cap. Of course, look, YMAX is also weighted on the market cap, but because stocks like Tesla, Apple, Microsoft, Nvidia, since they've risen so much, they have captured so much of the total market cap of the S&P 500 that they are now controlling it. And those few ETFs, I think they even call it the Magnificent Seven here, which is YMAG, they heavily move the S&P 500. So that's another thing to think about when you're talking about the weightings. I do believe YMAX is better diversified, and they're also paying a huge dividend, which can contribute to your monthly income, which you could use to pay expenses. The whole thing with Yieldmax ETFs in general is they basically trade a bit of the upside for a dividend distribution, which is cash in your pocket versus just capital gains. Now, that's kind of just an overview of everything that's going on here. I wish I could show you my question portfolio, but it looks like we got logged out. But what would I do, let's say, if YMAX hasn't really decreased that much? Because over the past 6 months, YMAX really hasn't decreased. They've actually increased, and I haven't been buying more shares. What I would do is I would look within YMAX at some ETFs that I believe are stable, could potentially rise, like PYPY, SQY, and BABO. Those are 3 that I bought. I wish I could show you. Those are 3 that I would potentially look to buy. And of course, I'm not necessarily recommending that to you. I'm just saying that's what I would buy. But maybe there's other Yieldmax ETFs within here that you'd like to buy. If you believe that YMAX's share price is overvalued, you can look for undervalued ETFs that lie within it. So this was just a video to kind of talk about what might happen to YMAX in a downtrend. If we were to see a crash or correction, this is what I believe. I believe you see a downtrend. It would take the full downside. You could potentially see reduced dividends in the long term, and it would obviously present a buying opportunity if you were looking to hold YMAX for the long term, which I currently am, and so far it's doing pretty well for me. I'll just continue to do my thing, and I will look for more buys and potentially more opportunities within these underlying ETFs as well. So if that does sound good, we're currently up to 6,514 subscribers. Thank you guys for sticking all the way to the end of this video. I hope you guys do take care. It served you well, and I hope to see you guys in the next video. Smile like this guy.